there's 3 cycles. You guys know that, right? There's obviously the continuation, there's the range cycle, and there's the obviously the point where you make decision, right? Which is this as well. I'll say the 2 cycles. But yeah, if you're in this cycle, then obviously you're just trending. You're trending in one direction, right? But if you start to obviously come up, create a high here, then create a low, you're starting to create a range. At that point, you kind of want to sit out and wait to see what happens next, right? So therefore, in those situations, I will want to see liquidity, because usually what will happen is you either come, let's say you create a range here, right? You create a range or after become a bullish. Let's say this is your pole here, right? You have like a bearish candle now that creates a resistance. Cool. You then have your support being formed here. This is the range you're currently sitting in, right? So now you have your resistance confirmed, your support almost confirmed. You then have a bullish candle support, right? So in this situation here, a couple things could happen here. First thing is obviously you can just come down after creating a top wick, right? This can happen at any given point. I'll say if you create a top wick first, then you're grabbing liquidity to go back down. However, if you usually, this is what happens in the bullish trend, you would grab liquidity down to drive up, which means that you'll be breaking our lows and then making your way up towards the highs, right? So in those situations, I'll only wait for liquidity whenever we're in the cycle of the range. But when we're in the cycle of the continuation, it's pretty straightforward, right? Because price doesn't always grab liquidity, and sometimes when it just continues to drive and create structure in a smaller time frame, let's say like it does something like this, where it just drives up, all of a sudden, you know, there's no pullbacks, there's just a couple of bullish candles, right? You have maybe a bearish candle here and there that prints like minor bottom wicks, etc. But aside from that, you just have pretty bullish candles at this point. Once it breaks a certain point, think of it as like a range 1 and range 2. It's like breaking structure. So once you have clean traffic, you should just expect price to mirror that whole entire traffic area on price, right? So that's kind of what it is, really. Understanding the difference between trend and range. And when you're in a range, you would wait for liquidity. When you're not in a range, you would just take the positions according to the ideal direction that price printed.